good morning. You're watching Market Cafe on ET now with me, Snehi Shah, and with me is Shreyansi. So, Shreyansi, wishing you a very good morning. And well, last day of the week, and it's a Friday we need, and it's the weekend we are looking forward to. Before that, we have one whole trading session left ahead of us. So, Shreyansi, take us through what the global handover is looking like. Lots of important cues to watch out for. We have Apple earnings also that have come out, so take us through all of that.
Absolutely, it is spot on, just like you said. And then, when you look at the moves coming in for the Wall Street, then when you look at stock futures, what you're looking at is that investors are still preparing themselves for the upcoming April jobs report. This is something that we've been talking about on the show throughout the course of this week, and today it is very important. That report is definitely keenly watched. When you look at the futures, then futures gained about 0.6% for Dow Jones. When you look at S&P 500 futures as well, they also rose nearly 0.3%, and Nasdaq 100 futures also advanced about 0.6% thereabout. Now, when I'm looking at the major stock indices, then what you're looking at is gains across the board coming in for the S&P 500. That also was an uptick of about 1% coming in for S&P 500. Dow as well, similar moves coming in, 0.8% uptick coming in for Dow. And when you look at Nasdaq, then that also outperformed and gained 1.5%. So those are the kind of moves that you've seen for Nasdaq as well. But despite Thursday's bounce, the major averages still remain on pace to end the week in a negative territory. So when I'm looking at the S&P 500, that was off by 0.7%. Week to date. When you look at Nasdaq as well, downtick of about 0.6% thereabout for Nasdaq on a weekly basis. And when you look at Dow as well, similar, like just a little bit of a downtick coming in for the Dow as well, that is on a weekly basis. Now, on Friday, of course, the central bank and all of Wall Street will be eyeing the April non-farm payrolls report with close attention to changes in wages. We'll be telling you a little more about the report later as well, but this report, of course, is keenly eyed. And when you look at the European markets, what you're seeing is that European stocks closed lower. And this was, of course, as global markets reacted to a slew of corporate earnings and the latest monetary decision as well from the Fed. Now, the Stoxx 600 index closed just about 0.2% down. And what you're seeing for DAX as well is a flattish move coming in. So 0.2% downtick coming in for DAX as well. Those are the kind of moves that we've seen for the international markets.
Well, all right, and let's also take a look at what oil is doing. And well, like equity, oil is also inching up, and oil has bounced after hitting a 7-week low on surging US inventory. So that's where we are with when it comes to oil. Now, US crude oil has edged higher on Thursday after selling off to a 7-week low on surge in petroleum inventories. And that's basically what's happening around oil, and this is on the back of softening demand. Now, the WTI June contract ended the day at $79.4 a barrel, which is an uptick of 39 cents, or almost 0.5% coming in. Year to date also, US crude oil is at 10.8% gains as of now. On the other side, then let's take a look at what Brent is doing. And the July contract for Brent is going on at $83.96 a barrel, up 52 cents, or almost 6 cents of a percent. And year to date, the global benchmark is also up 9%. So intraday as well as year to date basis on both of those counts, oil and WTI, Brent and WTI have been doing pretty well for themselves. Oil prices, remember, had tumbled more than 3% on Wednesday after the US commercial crude inventories, which exclude the strategic petroleum reserve, surged by 7.3 million barrels to 461 millions of barrels total last week. Remember, it's all a play of demand and supply when it comes to oil. And like general economics and the pure version of economics, when you have demand that is exceeding the supply, oil prices will go higher. But on the other side, right now, because we've seen a sudden surge coming in supply, oil prices had taken a slight bit of a blow, but now they're back to those original levels. Now, a stronger dollar also has a lot to do when it comes to oil, because a stronger dollar on the Fed Reserve keeping interest rates higher for longer could make oil more expensive for customers, putting pressure on demand as well. And then the equilibrium in oil prices could be achieved as well. But that's something we just have to wait and watch out for, Shreyansi. But largely, this is what's been happening in the world of oil as well.
Absolutely. And speaking of waiting and watching out for, we've got a lot of cues to keep an eye on, right? So when you look at global cues, then from the US, of course, you have the unemployment as well as non-farm payrolls data. So now, in terms of non-farm payrolls, of course, like I mentioned earlier, close attention to changes in wages. But in terms of expectations, then economists are expecting 240,000 positions to have been added, marking a slowdown from the 303,000 jobs gained in March. Now, they also anticipate that average hourly wages grew by 4% year over year, and they also expect the unemployment rate to hold steady at 3.8%. From the Eurozone, then there's the unemployment data coming in from there as well. And in terms of Q4 earnings, of course, you do have from the Nifty companies reporting, you have Titan today. And it's also the last day to buy to be eligible for dividend for ABB India. So keep an eye on that counter. And it's the last day to buy to be eligible for interim dividend for CRISIL as well as Sanofi India. So those counters will also be in the spotlight. And in terms of corporate action, there's of course Tips Industries, and that buyback is closing. So that one will also remain in focus. And what's also key to watch is that NSE board will be mulling bonus issue. So keep an eye on that as well. And the lock-in period ends for a couple of counters. So you've got Blue Jet Health and BLS e-services as well. In terms of other events, of course, you do have Bajaj Pulsar NS400 that will be launched, and Flipkart's big savings day sale that begins. So we're definitely keeping an eye on that as well, Snehi.
Well, absolutely. Lots of important commentary also coming in, because you've got the Chicago Fed President Austin Goolsbee. He'll also be speaking. ECB's Philip Lane will also be speaking. But Austin Goolsbee will be more in focus because this is the first appearance by an FOMC member after Jerome Powell and the FOMC have kept the rate steady. But on the other side, also from the Nifty 50 pack, along with Titan, we also do have Britannia coming out with its numbers today. But let's move on, talk about all the important global stories that we've been tracking for you this morning. And the US trade deficit, that's the one to talk about, because that has narrowed slightly in March as a decline in imports was tempered somewhat by a plunge in exports. The trade deficit contracted 0.1% to $69.4 billion versus $69.5 billion coming in for February. Trade through a surge in imports was a large drag on the Q1 GDP as well. The economy grew at a 1.6% annualized rate last quarter after expanding at a 3.4% pace in the October to December period.
Meanwhile, Apple soared as much as 7% in extended trading after the company announced the largest ever share buyback in US history. The iPhone maker intends to repurchase shares worth $110 billion, surpassing its own previous record of $100 billion in 2018. Apple also reported earnings which beat street expectations, and overall sales fell 4% and iPhone sales fell 10% on a year-on-year basis. Now, the company also announced a dividend of 25 cents, marking the 12th straight quarter of an increase in shareholder payout as well.
Well, and Macquarie annual profits have slumped 32%, the sharpest in the last 15 years, as a stabilization in energy markets hammered its commodities trading division. The firm's CGM business, its top profit-generating arm, recorded an annual profit 47% lower than last year, and the Australian firm's shares have been underperforming its global peers over the past year as well.
And we're in the thick of the election season, with the third phase of polling less than 2 weeks away, and all major parties are putting their all in campaigning. So we at Times Network went on the campaign trail of union ministers like Home Minister Amit Shah and Railway Minister Piyush Goyal as well. Take a look at this special report then.
जहां पर भी जाते हैं, हमसे 2 कदम आगे जनता दिखाई पड़ती। एक प्रकार से ये वास्तविक लक्ष्य है और निश्चित रूप से सिद्ध होगा।
400 के टारगेट के सामने विपक्ष कहता है, चाहे आप राहुल गांधी ले लें, चाहे आप ममता बनर्जी, 150 से 200 की सीट की टारगेट बताते हैं कि इससे ज्यादा आप बढ़ नहीं पाएंगे। कभी इसका प्रेशर चुनाव के दौरान होता है?
जो लोग जमीनी हकीकत में जीते हैं, जमीन को जानते हैं, वो लक्ष्य भी ऐसा तय करते हैं जो सिद्ध हो सके, इसलिए प्रेशर में आने का क्वेश्चन डज नॉट अराइज।
When both Prime Minister Modi and Devendra Fadnavis ran double engine government in center and Maharashtra, look at the amount of infra projects that are started all across the city. You can see metros coming up, coastal road coming up, the Trans-Harbour link has already been built, the railway expansion is going on. All roads are being cement concreted. See the road? Now there will be no problem in the monsoon. Similarly, for decades, we have been waiting for the drainage to be treated before being put into the sea. Finally, that is happening. All in all, Mumbai has seen a wave of development, except when Uddhav Thackeray was chief minister, he stalled all the projects. And therefore the people of Maharashtra were extremely unhappy. Now that the real shifts and our leadership has emerged and is with us, and Manya Eknath Shinde is the chief minister, all these projects have started again.
You have handled very important portfolios as a minister. I will come one by one. First, regarding consumer affairs. Now, this is something which has been in the news for different reasons. What are the steps as a government as a whole which are going to be taken, and why I am asking this question? Because you would have heard of food regulators inspection, you would have heard of global things which is taking steps considering the standards which are set by India. So how consumers should look forward for the next Modi government?
There are two aspects to the question. One is prices and one is quality. In terms of prices, the Prime Minister has ensured that we have the lowest inflation in the last 10 years. And there's been a decadal low of inflation.
In terms of actions, see, monetary actions RBI will take, but government actions, how will fiscal support can be given?
I've already told you, this government has been successful in ensuring the lowest ever inflation in India's history. We are the first government to mandate RBI that inflation management will be their primary focus. Before that, no other government.
Regarding one Nestle issue, the sugar content in Nestle, and the instances of food regulator inspecting few of the companies. Now I'm saying, there is a need for fresh regulation in our standards as well, or there will be done?
To evolve standards, there will be a massive focus on quality. Last 10 years, the government has brought down the number of quality control orders.
Alright, we'll be bringing you more from our election campaign trail as well. But for now, viewers, let's slip into a very short break on this edition of Market Cafe. When we return, we'll take a look at how the Asian markets have opened up. So you stay tuned, we'll be right back. Hi there, welcome back. You're still watching Market Cafe on ET Now. Now, a stock in focus today is going to be Bajaj Finance, because in what seems to be a big boost coming in for the company, the Reserve Bank of India has lifted its ban on two of Bajaj Finance's products, e-com as well as the Insta EMI card, with immediate effect. The company has said that it would now resume sanction as well as disbursal of loans under these two segments, and this also includes the issuance of new EMI cards as well. Now, remember on the 25th of April, when the company had reported its Q4 numbers, they had also mentioned that they have written to the RBI saying that they have made all the necessary changes that were required under these two products, and they had requested the RBI to lift their ban, and the RBI has done so, and this announcement has come through yesterday in the evening. For a little bit of background, on 15th of November, RBI had directed the company to stop sanction and disbursal of loans under these two products, and it has taken the company 5.5 months to comply with all of RBI's regulations and get the ban lifted. Now, what is the impact of this? Now, brokerages earlier believed that only the cross-selling aspect of Bajaj Finance's business was impacted, that too in a limited manner on the back of this embargo. According to ICICI Securities, on a quarterly basis, roughly 20% of the total customer acquisition came via the digital platforms, and digital acquisition dropped to 11%, which is 4 lakh customers in Q3 from 19%, which is 7 lakh customers in Q2 of FY24 due to the ban. Remember when this announcement came out on 15th of November, which means it came in the middle of Q3. So the impact can be seen from Q2, Q3 and Q4. When we look at those numbers, we'll be able to understand what the impact of this ban has been. According to IIFL Securities, restriction has resulted in roughly 10% lower disbursement in terms of volume for quarter 4. So that's a little bit of a hit that the company has taken on the back of this ban coming in. And company's recent guidance, when they have said that they pencil in 26 to 28% AUM growth going ahead, this brokerage house IIFL Securities believes that the company had already anticipated this lift coming in, and thus all the gains have already been priced into this AUM target. So they don't expect much to happen for the stock, but yes, lifting of restrictions would be a positive re-rating catalyst for the stock is what IIFL Securities believes. On the other side, Motilal Oswal believes that lifting of restrictions could be a trigger for the stock as well. Now, when you take a look at the numbers from quarter 2, quarter 3 and quarter 4 of last year, when you take a look at EMI cards acquired on the app, they went from 1.3 lakhs in quarter 2 to 1 lakh in quarter 3, and that took a further dip to 99,000 in quarter 4, marking a 1% sequential change. Personal loans disbursed on the app also fell 10% on a sequential basis between quarter 3 and quarter 4. EMI cards acquired digitally fell by 7% on a sequential basis between quarter 3 and quarter 4. And also, when you take a look at the B2B loans from digital EMI cards, that did see a steady increase coming in. But on the other side, when you compare the difference between quarter 2 and quarter 3 and Q3 and Q4, the growth slightly slowed down from 6% between Q2 and Q3 to 2% between Q2 and Q4, Q3 and Q4, pardon me. So, but these restrictions have been lifted now, so we'll have to wait and watch at what Bajaj Finance's stock prices today, how that stock reacts today on the back of this positive news flow. But yes, largely this is the announcement coming in that the ban from the RBI on 2 of its products have been lifted now.
Absolutely, and let's zoom in on some earnings then. When you look at Dabur, that reported its numbers and posted a healthy set of earnings for the quarter gone by. When you look at profit, then profit rose over 16% to 350 crores. And then when you look at the operating performance, also strong operating performance with beat on the EBITDA margin versus the expectation. And the company also reported a 4.2% volume growth during the quarter. When I'm looking at revenue, there's a 5% uptick coming in for the revenue. EBITDA also 13.9% uptick coming in for the EBITDA. And like I said, for profit, over 16% uptick coming in for the profit. Let's also listen into what the management had to say, because Dabur's CFO Ankush Jain, talking to ET Now, said that the company expects strong volumes in financial year 25 compared to FY24. Listen in to what else he had to say as well.
We are seeing some green shoots or some very early signs of revival. In fact, this is the only quarter in last 3 quarters where rural growth has been slightly higher than urban growth, while in last 3 years it has been declining. So it's positive for us, Dabur, because our 45% of the saliency comes from rural. So I think we are optimistic that next year should, at least from a volume perspective, be better than this year on a full year basis. Yeah, though recovery, more optimistic recovery may happen from Q2 or maybe Q3 going forward. While our spices conform with all the FSSAI regulations, and I think ours is more general, since the regulatory bodies have become, I think, more vigilant. But I must say, as an organization of repute, where the quality is at forefront for us, all our products, every product we manufacture, they comply with the relevant regulatory bodies.
Well, all right, that's the word coming in from the CFO of Dabur. But let's move on and also focus in on one stock from the Nifty 50 pack that is all set to report its quarter 4 and FY24 earnings today, and that happens to be Titan. Let's go across to Winnie, who tracks this stock closely to understand what we can expect from this stock's performance, from the company's quarter 4 performance, as well as what the street is expecting. Winnie, good morning. Over to you.
So yes, in terms of the jewelry retailer Titan, we are expecting around 11% growth in terms of revenues, profits 8.2% growth, while margins expected to see a slight bit of an expansion of 11.4%. But what's key and what we'll watch out for is also in terms of gold prices. How is that shaping up? Any impact in terms of demand there? Because we saw a sharp rise in terms of the gold prices. So yes, expecting a high double-digit growth in terms of value, mainly, and this is despite the gold prices so far. So that's interesting to watch out for in terms of commentary. Margins expect to see a slight bit of a marginal growth, and this is mainly due to the increased salience that we're seeing of the low margin gold jewelry and Other than that, jewelry EBIT margin, that could be a bit subdued. That's what we're watching out for. New growth engines are key factors to watch out for. Carrot Lane, especially in terms of how is the growth there, as well as volumes that are likely to be a bit of an impact that we could see going forward in terms of a commentary that we're keeping an eye out on. Though in terms of Q4 update, they've said jewelry business will see a 19% growth, which accounts to around 80% of their business. Watches expected to see a 7% growth. And overall, the company said the overall revenue growth is also expected to be strong, and 86 stores is what is there that they were added during this quarter. So key factors to watch out for in terms of that is the demand trend outlook, gold price outlook, as well as sustainability in terms of volume growth and new growth engines. How are they performing are key factors to watch out for.
All right, thanks, Winnie. So we'll watch out for those key factors, but then let's keep it going with FMCG companies. And Britannia is also slated to come up with its Q4 results. Tell us a little more about what kind of expectations are being penciled in for that one as well.
So yes, in terms of the biscuit maker Britannia, we're expecting around 3% growth in terms of the revenues of the company. Profits are expected to be subdued, while in terms of the operational performance also, we're expecting a bit of a subduedness and a contraction of around 100 basis points in terms of the margins of the company. Now, yes, what is impacting the gross margins of the company, the EBITDA margins of the company is that gross margins mainly because of price cuts, higher grammage offset. That is something that is offsetting the impact of the softer commodity prices. So let's keep an eye out on the margins factor specifically and commentary that will come in terms of the raw material prices as well as in terms of margin outlook. Also, let's not forget that margin decline this time and EBITDA margin decline is because last year there was a bit of a one-off that we had seen in terms of the PLI benefit they had received. So yes, because of that we're seeing an EBITDA margin decline. Volume growth is expected to come in at 5%. So watching out for that. Keep an eye out in terms of commentary on rural, the Hind belt, how is that doing, domestic market share, what are the trends there. Competition from the local players and regional players is a key factor to watch out for, and obviously commodity prices like I mentioned before as well. Any commentary on that is something we're watching out for.
All right, Vinny, thanks so much for taking us through both of those companies and their expectations. So Titan and Britannia will be the stocks to watch out for today. But well, moving on, another stock that will be on our radar this morning is Coal India, because that company has reported an uptick of 3.5% in their Q4 revenue on a sequential basis. But the net income was down almost 15% for the same time period, coming in below 9,000 crore rupees. My colleague Ashesha is standing by with a fine print of all of these numbers. Ashesha, good morning. Take it away.
Well, yes, lower e-auction prices, higher operating and other employee costs impacted performance in the quarter gone by, and it partially offset the benefit of higher volumes. Remember, e-auction realizations were on the lower side in the quarter gone by. They declined by nearly 23% on a sequential basis, and that is on account of lower e-auction premiums. E-auction premiums, which stood at about 117% in the third quarter, declined to about 65% in this quarter, and hence that impacted profitability of e-auction volumes in the quarter gone by. But as I mentioned, volumes were on the higher side. E-auction volumes rose 43% sequentially, while FSA volumes also saw an uptick of about 2 to 3% on a sequential basis. Higher employee costs impacted performance in the quarter gone by. Employee costs for the full year stood at about 48,800 crores, which was higher than what the management had guided for. Management guidance was at about 47,000 odd crores. However, analysts expect employee costs to normalize in FY25, and also because e-auction premiums continue to sustain at that 65% mark, analysts expect perhaps some earnings upgrades that could come in over the coming couple of quarters. Macquarie has come out with a note where they are maintaining the outperform stance with a target price of 465. For the quarter gone by, they say higher costs, lower e-auction realizations drove EBITDA miss and EBITDA decline on a sequential basis. They await management feedback as to why employee costs suddenly rose on a sequential basis in the fourth quarter, but they say that they are maintaining the outperform rating on account of strong volumes that the company reported, robust balance sheet position, and 5% plus dividend yield that the company has been sitting on. So all in all, it was a mixed set. Analysts are not very positive on account of higher employee costs that the company reported in the fourth quarter.
Shishta, so that's about Coal India, but let's get a move on then, and it's an ET Now Newsbreak confirmed. UGRO board has approved plans to raise up to 1,323 crores. Cheryl D'Souza, who broke the story earlier, joins us with all of those important details. Cheryl, help us understand how the company looks at deploying this fundraise and who all participated in this fundraise then?
It's an ET Now Newsbreak confirmed. You have Ugrow Capital that has informed the exchanges that it is going to raise funds to the tune of about 1,322 crore rupees. This from existing as well as new institutional investors and marquee family offices. Earlier, we had informed our viewers that sources had informed us that big PE investors, marquee investors, as well as family offices were looking to participate in Ugrow Capital fundraise along with employees as well as the promoter of the company. And that's exactly what the company has informed the exchanges. They've said that the existing PE investor, Samina Capital, will be participating in this particular fundraise. They have committed 500 crore rupees via warrants. And apart from Samina Capital, you also have big PE investors and marquee investors like Madhusudan Kela. You also have the Anand Jain family that have actually decided to participate in this fundraise. You have Ranjan Pai of Manipal Group. You have Janeja family of Mankind Pharma Group as well that will be participating in this particular fundraise of Ugrow Capital. Apart from that, you have Alchem Labs, Atul Nishar, Gauri Khan, as well as Dabur Family Office, along with the promoters that will be looking to invest about 1,323 crore rupees in the fundraise. Remember that the company has also mentioned the fact that this fundraise has already received strong commitments, and also this particular fundraise will make sure that the growth is effectively locked in for current year as well as next year. So that's an ET Now news break confirmed that you have the marquee investors as well as big family offices that have participated in Ugrow Capital's fundraise, where they're looking to raise about 1,322 crore rupees.
All right, Shaira, well, thanks so much for taking us through that. And we'll also be interacting with the management of Ugrow Capital today at 12:15. So you stay tuned to the channel for that conversation as well. But viewers, for now, we'll slip into a very short break. We'll be right back with more stock-specific news and updates. Hi there, welcome back. Thanks so much for still staying tuned to Market Cafe. You're still watching ET Now. Let's take a look at all the stocks that could be potential buzzers in today's trading session on the back of their Q4 numbers or on the back of news updates. And we have Jinay who's joining us this morning with a roundup of all of that. Jinay, good morning. Thanks for joining us. Take it away.
Yes, so let's look at stocks in focus, which will be in today. First tip, Mazagon Dock Shipbuilders. The company has signed an individual shipbuilding contract with an European client for the construction of 3 multi-purpose hybrid power vessels, and the approximate value for this contract will be $42 million. Moving on, Moil will be in focus as the Moil registers its best ever April production. The production stood up 22% for this month, and the sales grew around 17% year-on-year basis. Moving on, keep your eyes on IEX as the company achieves 9,044 EU total volumes for this April month of 2024, an increase of 14% year-on-year basis. CEAT came up with weak results with respect to the expectations. The revenue stood flat, grew around 4% year-on-year basis and stood at 2,292 crores. The net profit was down around 18%, which stood at 108 crores versus 133 crores year-on-year basis, and the EBITDA margin stood flat, with an improvement of 30 basis points year-on-year basis.
All right, Jinay, thanks so much for joining us and taking us through that list. We'll be focusing on all of those stocks in today's trading session, but India's aviation sector continues to soar with the budget carrier Indigo, now the third largest airline by market cap. Ace investor Vijay Kedia shares his views on what he expects of the airline industry. Listen in to what he had to say.
We should always keep our aim high, no? Whenever the promoter of this Indigo sells his shares, no, I always feel ये शेयर बेचता है ना मैं ले लेता हूँ सारा
क्या बात है
I tell you
now we know that who's buying the share in the block deal
no I cannot buy क्योंकि he is selling 2,000 crore 3,000 crore worth of shares मेरा औकात उतना है नहीं भाई so but always it comes into my mind कि ये शेयर बेचता मैं कैसे किसको shares ले लूँ. Coming to your point, I feel this is a sunrise sector यार. Now at that time whenever whatever data I gave to you in 2022 budget day, you know, now everybody is talking about those data. Yeah, 23 budget I think, not 22. 23 budget. Yeah, 23
yes,
budget.
Yes, 23
just 1
budget.
year.
Yes,
yeah,
yeah,
only
yeah.
13, 14
yeah,
months.
yeah, 23 budget. Yeah.
So I think sky is the limit. Sky is the limit for this company. And it's not a recommendation, but I am holding my shares. And still 1,50,000 crore market cap here. in this economy. Now everybody, I have told there is a quote of mine, Nikun, that when luxury becomes a necessity, a big story is there in the making. I think same thing is happening in this airlines industry. So miles to go.
All right, that's the word coming in from market expert Vijay Kedia. But in a conversation with ET Now editor-in-chief Nikunj Dalmia, Neelkant Mishra shares his investment ideas and the themes he thinks will be the wealth creators in the days to come. Here's an excerpt from that chat. Let's go across and listen it.
So from a market standpoint, which theme to your mind is going to become big to mega, and where to your standpoint stock prices are not pricing in already 3-4 years of future growth?
I would say that energy is a big problem area for us, right? And it will be for the next several decades. We are trying to do what very few countries have done, which is grow from low income to upper income without controlling our own sources of energy. So we've not, I mean, other than renewable energy, which frankly, I mean, we have a lot of sunlight, we have a decent amount of wind. We should be doing a lot more, and we are. But at the same time, not every type of energy consumption can be converted into electricity, and not very quickly anyway. So energy is going to be a huge challenge for us, and therefore a big opportunity for entrepreneurs and businesses, and therefore for market investors as well. I think the second is just construction. So while I think on the real estate side, I'm very constructive. I think the real estate cycle has already been on for the last 2 years or so, and my sense is when these cycles turn, they don't end very quickly. So what we've seen so far is a sharp increase in sales, but I think construction needs to pick up going forward. And therefore, we are very bullish on the inputs to construction. Some are late cycle construction, so the cables and wires and the paints and the furniture would come in later, maybe sanitary ware as well. But in the cycle that is yet to play out, and the natural inclination to start buying real estate stocks because real estate is going to do well, I think has some flaws, because most companies have limitations in how fast they can execute. And in fact, you would reward companies that are being careful and relying to only take on as much as they can execute and not try to expand too fast. But so on the real estate stocks themselves, I'm not sure if there is yet more upside. But on things that go into construction, yeah, those things can scale up faster, and there I would be a lot more constructive.
All right, well, that's the word coming in from Neelkant Mishra. But let's talk about a stock that was a high flyer in yesterday's trading session, up 3.5%, and that is Arvind, because Arvind is not only dealing in textiles and fashion, but in the advanced textile material as well. We caught up with Puneet Lalbhai, the VC and Executive Director of Arvind, on this segment. Listen into what he had to say.
Which is actually, a very large opportunity, $100 billion plus opportunity globally, around textiles that are not into the fashion end use. They are for industrial end uses, they are for all kinds of other end uses. And Arvind has ventured into this space about 12 years ago, and it's now rapidly growing. It's the fastest growing division within Arvind. Okay. We are now about 15%, fast going to 20% of our overall turnover. And we are in 3 segments. One is human protection. So we provide head to toe protection for all kinds of hazards, steel plants, flash fire protection, electric arc protection, bulletproof, cut resistance, all of that. Then there's an industrial fabric segment where we are focused on filtration. So liquid filtration, gas filtration for pollution control, etc. And then the final segment is composites, where we make glass and carbon fabrics, and then also have forward integrated into making parts. So we make tennis rackets, badminton rackets, we make structural components using glass fiber. The fabric that goes into windmill blades is made by us. We are also making products for the mass transportation industry. So the nose cones for metros, the interiors for Vande Bharat trains.
So all of that. So how do you think this could actually be the fastest growing side in the next few years, given that, the government is also focusing so much on
Absolutely.
this
I
side?
think if you look at this industry globally, a point comes in the development of an economy where the consumption of these materials dramatically increase. And we are still on the right side of that curve in India. So a lot of demand is going to get unlocked in these specialty textile areas. And I think we are very well positioned as a country to build this industry and become a global leader in this.
All right, well, that was a snippet of the conversation my colleague Vinny Motiwala had with the board of Arvind. But let's move on and talk about three other high flyers in yesterday's trading session on the back of some splendid earnings. You had India Mart that was up 8%. You had Chola that was up 6%. On the other side, Federal Bank also did pretty well, up 3%. We managed to speak to all of these managements yesterday on their quarter four numbers and the outlook they're penciling in for their companies going ahead. Listen in, but viewers, with that, I'll bid you goodbye on this edition of Market Cafe. You stay tuned. The market takes all the action ahead.
Operating outlook for the next year looks better because one, we have been able to get some handle on the margin. Our margins for the fourth quarter used to be 26-27%. We have been able to do on a standalone basis a margin of closer to 30% this particular quarter. And the management team is confident that we should be able to maintain a margin of 30% here on. On the customer addition front, I cannot give you any guidance for the next quarter or so, but I am pretty confident that in the next 2 or 3 quarters, we should be able to get back to our normal growth rate of 5,000 customer addition per quarter per month, per quarter net addition. Once that happens, then our collection and revenue will also start to improve. So for the entire year, we are looking for a recovery from the lows of the last 2 quarters after in the H2 of the FY25.
Next year, we are looking, again, I would not want to put too much hopes. We will still keep our target at around the 20-25% level. And because a lot of additional factors needs to be considered, monsoon, elections. The vehicle finance will become 50% of the overall book. The loan against property and the home loan would constitute around 35%, which is like a property-based, lending. And then you will have the other newer segments which we have started, like the unsecured and the SBPL and the SME segments contributing the balance 15%. Broadly, the unsecured should be in the range of around 8 to 10% levels is what we are targeting right now.
The board is working on it with a search committee. The board is in the process of putting all the recommendations together, and the board will do what is needful. We've got time. Sham's here till September 24th, so we will work on that timeline. The view has been what we've said all along. It's the best candidate for the job.